This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on October the 12th, 2012. Our time is 8:45 Mountain, 10:45 Eastern. The radio show runs on AM 640 in Toronto, QR 77 Calgary, 630 CHED in Edmonton. If you ever miss a radio show, we are archived on Harold's websites, rarecoloreddiamonds.com and HESradio.com. We also have a podcast through iTunes. All you need to do is have iTunes on your computer. The show automatically comes in. We are portable. You can take us anywhere. Coming up later on in the show, we have a story on pink diamonds you do not want to miss. Pink diamond era nears its end, according to an expert. But that is a positive for those that are in this market right now. We'll talk about it a little later in the show. And one of the things that really struck me this week, putting our newsletter together, Harold, is how similar to the late 70s the current times are. You have concerns about inflation. In fact, the German magazine Der Spiegel, their front cover was about inflation. People very concerned about inflation, food inflation, gasoline. We're seeing possible shortages of food. We did see shortages of gasoline rationing in California. There were shortages. Also a poor economy in the United States. There's no getting around that. Also a possible one-term president similar to Jimmy Carter, and trouble in the Middle East with Iran. It's very similar to the late 70s, and that's back in the time when we saw hard assets really, really boom, Harold.
You better believe it, Randy. You summed it up very nicely. Again, inflation is the number one thing that we need to be concerned about at this particular point. So, again, you're 100% right, and all the headlines are proving that. All in all, the markets did okay this week. The gold market's trading in a range right now. We need to break above the $1,800 level. We're trading right now at $1,774. We're only $25 away from breaking $1,800. Now, again, in the futures market, you've got the short-term traders. We're not traders. We're buying and holding long-term precious metals. So the fluctuations in the market really shouldn't affect you in any way if you own the metal outright. What could happen is that if gold does not break 1,800 over the short term, you could see a pullback as there is a large short position in the market at this point. So if you are trading heavily leveraged futures positions or that type of thing, I'd be a little bit cautious, because two things can happen. Gold can break 1,800 and make a run up to 1,900, which is the all-time high, or gold will not break 1,800 over the short term, fall back to about 1,680 to 1,700. We're not looking at a big drop, but the fact is that we need to break above 1,800. Very similar situation in silver. We're trading at $34. I want to see silver get above $36 and then 38, and then we should see a major breakout. So again, because of inflation, you want to own physical gold and silver. In 1979 and 80, those were the two of the three major markets that made gigantic moves. The other move was diamonds that went up 500% during that period of time. So in 1972, gold was trading at $125. By 1980, it was trading at $850. It went up basically 800%. Silver back in 1972 was trading at $1.25, and by 1980, with high inflation, was trading actually at $52. So that's what happens when you start to see inflation. Now, the oil market is the other area that you certainly want to watch out for. The oil market was very strong this week, and we saw 2 days where the price of oil was over $2 up on the day. In fact, one day the market was up almost $3. We're trading right now up 22 cents at 92.29. I'm extremely bullish on oil, as well. I do believe we are going to see shortages in the oil market, and that is extremely inflationary. Again, inflation is the one thing that we've got to be extremely concerned about. You know, Randy touched on this. You know, there are some people out there that believe that everything is going to be fine. And then there's people out there that believe that we're heading into a very, very dangerous time financially. And again, that's what makes the markets go up and down. Don't forget, when you buy a stock, you're buying it from somebody who's selling it. So, you know, there's always two different opinions on every single transaction. Some people are bullish, some people are bearish. I look at the newsletter this week, and I can't see how you could be bullish on the world economy at this point. You're talking about headlines, for example, that the IMF, which is the International Monetary Fund, sees alarming high risk of a deeper global slump. You've got the IMF seeing the European banks facing $4.5 trillion of sell-offs. This summer's big droughts are already causing global food prices to rise. The milk cow drought is causing price of milk to jump substantially. You're also talking about California gas prices jump to all-time highs. California refineries are rationing gas, and California's gas price nightmare. All of these situations are extremely inflationary. David Tice is saying that this market is just like 2008, just before the market crashed. So the point that we're making here is that we don't write these headlines. These headlines are there for a particular reason. The particular reason is that the world is in financial trouble. In Europe, they've got a sovereign debt situation that's causing Greece and Italy and Spain and Portugal and other countries on the verge of bankruptcy. The United States, everybody knows, is in financial disarray, and there's no clue as to how in the world they're ever going to pay back the money that they're printing and borrowing. So the bottom line is that every situation that we're looking at this particular point is inflation. The fact is that there was a major drought this summer that's going to cause food prices to skyrocket because there's not a lot of grains around. So a lot of the farmers and cattle ranchers had to kill off their cattle early before they grew to the proper weight and all that, because there wasn't enough feed to feed them anymore. So we're looking at inflation very similar to 1979 and 80. And if you go back in history, history will tell you what to do. In 1979 and 80, as inflation was extremely high, the Federal Reserve started to raise interest rates, and interest rates all the way up to 22%. And that's what's going to happen again. So again, if you don't follow history, history tends to repeat itself. And again, I've been through this before. I traded the metals back in the late 70s, early 80s. I was involved in diamonds when they went up 500% in those 2 years, and I saw what happened with oil. You've also got the situation in the Middle East, which is not getting any better. So every situation, no matter how confusing this whole world scenario is, the one thing that we need to concentrate on as people that are going to try to get through these next 5 years is inflation, and how do we deal with that? Well, it's very simple. You do not want to be in paper assets. The stock market at the end of the year after the elections in the United States could absolutely fall out of bed. Some are predicting a 30 to 40% drop once the Bush tax credits expire. Then on top of that, you're talking about extremely high oil prices that could go to over $200. That would cripple the world economy. On top of that, you've got countries and the Federal Reserve in the United States that are openly printing and printing and printing money. What does that mean? It weakens your currency. It's like any other commodity. When you're producing too much oil, the prices are going to drop if the demand doesn't eat up that excess oil. It's the same thing. If there's a bumper crop in grains, the prices are going to go down. It's the same thing with currencies. When you're printing so much currency, when the U.S. is printing so many of their dollars, it reduces the value of the dollar. What we ultimately believe is going to happen is the U.S. currency is going to drop down to about 50 cents. That would bring gold prices probably up in the range of about $4,000 to $5,000, and it would bring silver prices up to the range of about $200. So again, this is what we're experiencing at this point. And again, what you need to do in order to get through these extremely difficult times is get out of your paper assets, get all the risk out of your portfolio. If there's a chance that this market is going to fall like it did in 2008 when the Dow Jones went from 14,000 down to 6,500, why in the world would you want to risk your hard-earned money on that type of scenario when all you have to do is sit on the sidelines and wait for the scenario to get better? I've said this many times, you don't invest in stocks when a country is on the verge of a financial bankruptcy, and that's what's happening all over the world. We've got to be smart about this. We work so hard, and again, it's so difficult to make money at this particular point because interest rates are down to zero. You cannot put your money in the bank and make any return. It's very difficult to make money in real estate, especially in the United States at this particular point. And then on top of that, the stock market is like a gambling casino. So what do you do? What does a small investor do to get through these extremely difficult times? Number one, you get out of all risky investments. You do not want to lose your money at this particular point. I would much rather see us just preserve our capital and not make anything than put our money into a money like the stock market and take a risk of the market dropping 30-40%. On top of that, you need to own, and history will tell you this, hard assets. Every market has its time. During the 90s, when the U.S. economy was strong, their dollar was strong, and the stock market was strong, it made sense to be in the stock market. But now we're in the exact opposite situation. Now we've got a scenario where stocks are weak, where the economy is weak, and gold is strong. Because back in the 90s, gold was at $250 because there was really no reason to own gold at that particular point. But gold went from $250 all the way up to $1,900. And if that doesn't tell us, that there's problems in the world economy, nothing in the world will. So you need to own physical gold and silver. You don't want to trade these markets in and out. You want to buy and hold, and you're going to use gold and silver and the increase in those markets to offset inflation. Because as food prices go much higher, and they certainly are, and as oil prices go substantially higher, which they certainly are, you need to make or have the type of investments that will go up as these type of scenarios are going up. You want to own oil. I recommend U.S. oil as an ETF, an exchange-traded fund. You can even put that into your retirement savings plan. If you've got mutual funds or stocks in your retirement savings plan, there are some companies in Canada that you can actually convert your retirement savings plan into physical gold or silver. I believe the Canadian Mint is one of those companies. We also very highly recommend that you keep some cash on hand, you pay down your debts, and own some private assets like diamonds that we're going to talk about later on in the show that also went up 500% in 1979 and 80. There's absolutely no doubt in my mind which direction the economy is going to. The fact that the U.S. government and the Federal Reserve is printing as much money as they are, and they will print unlimited amounts of money to try to get the economy going again. The problem is that it isn't working. It didn't work with quantitative easing 1. It didn't work with quantitative easing 2. And basically, we'll have to see what happens with 3. But all that's happening when you print that much money is you're inviting extremely high inflation. What we believe is going to happen over the next 5 years is that interest rates will stay low, the Federal Reserve will continue to print money, oil prices are going to continue to skyrocket on shortages, food prices will continue to go high, so we will have inflation, and the fact is that we need to own the type of assets that will offset the inflation, so at least you can continue to prosper. And then what I believe is going to happen is, just like 1980, we're going to see a rise in interest rates because that's the only way that they can restart the economy or reinflate the economy is to raise interest rates. And that will raise the value of the U.S. dollar, and that will bring interest rates all the way up to possibly 15 to 20%, like we saw back in 1979 and 80. The idea is to make your money now over the next 5 to 10 years in gold and silver and diamonds and oil. And then once we cash out of those investments, then we take a look at the other markets and see what is the next trend in the market. It could be stocks again, but then again, if interest rates are at 15, 20%, why wouldn't we want to just put our money in the bank, be 100% safe, and lock in 15 or 20% interest rates in CDs or that type of thing? Again, as the markets continue to progress, we'll be able to determine on a better level what is going to continue to happen and what's going to happen in the future. But at this point, there is no doubt in my mind, and people that are much smarter than I am are saying the same things, that we are heading into the most inflationary times that we have ever seen. And if you don't get into this right now, into gold and silver and diamonds, you're not going to have an opportunity to offset inflation and accomplish what we want to accomplish down the road. So, again, all the news that's coming out seems to be bearish. However, for every buyer, there's a seller. For every winner, there's a loser. When a market goes up, something else is going to happen to offset it. For every action, there's a reaction. So, again, I'm extremely bullish on hard assets. We've been bullish for 10, 11 years. When we first started doing the radio show 11 years ago, we were like the laughing stock. Nobody ever believed that gold was going to take off again, and gold was at $250. But then it broke through $300, and some people became to be believers. I do want to say with tremendous pride that my clients in Canada, that when we first started doing the radio show in Alberta and in Toronto, but there were several clients that jumped on the bandwagon at that point. I've got many, many clients that own gold at $250 and $300. I have many clients that own silver at $4 and $5, and again, we recently hit $50 silver. So I'm very bullish on these markets, extremely excited about the future, because I truly believe that we're in the right markets at the right time, and my listeners and clients will continue to do extremely well. As I've always said, 90% of the money is made by 10% of the people. All I care about is that the listeners to our show and our clients are in that 10%, Randy.
Well, it was 10 years ago, over 10 years ago, you brought us the idea of investing in hard assets, gold and silver, and then 7 years ago, diamonds. You were the first to let us know about diamonds. We'll talk about diamonds here very shortly. A must-hear story about pink diamonds we'll tell you about. But it was over 10 years ago, and in that time, there was only one company that you felt confident enough to recommend that my fellow Canadians use to invest in precious metals. That is Worldwide Precious Metals out of Vancouver. They're a Canadian company, been in business over 10 years. The telephone number to speak with them, 1-866-623-2002, 1-866-623-2002. Their website is wwpmc.com. You can get our free weekly newsletter from them. It's absolutely free. You can go through it in 5-10 minutes on your smartphone, on your computer. You can spend hours if you want. It's up to you. Get our newsletter. Be on the same page that Harold and I are on when you're listening to our radio show. 1-866-623-2002. The website is wwpmc.com. And back in 2001, gold and silver, they resumed their role as a store of wealth. They were protecting you against the decaying purchasing power of paper money. And really, that's what it's all about, stopping the destruction of your paper wealth by investing in hard assets like diamonds, gold, and silver. Turn paper assets into hard assets for real wealth, and speak with Worldwide Precious Metals about that today. On the gold side of things, in our newsletter, an interesting interview with Keith Barron, King World News. Eric King, great website, interviewed Keith Barron in the investment business for 40 years, said gold is going to keep going up until the U.S. dollar is finished. So the reign of the U.S. dollar will come to an end, and we will see a new currency. But in the meantime, you could see gold go to $3,000, $5,000, $7,000, $10,000. Who knows? It's not really an appreciation in the price of gold. It's a drop in the currency. This is something people don't really understand. Gold is going up because the global fiat currencies are becoming worthless and less all the time. If you look at the chart of the U.S. dollar over the last century, the Fed has virtually destroyed the U.S. dollar already, and this will just accelerate going forward. So all we need is to see here is a major pension fund to begin moving into gold, and you will see some real fireworks because the availability of physical gold is already tight in this market. Eventually, we will be at a mass movement into gold during this really strong cycle. And the daily movements in the price of gold will literally shock people, even the most veteran of the gold bugs. Putting aside the consolidation of gold right now, we don't know exactly when it's going to punch through 1,800 and eventually to all-time highs. One thing we do know is that the intensity of this global crisis will only continue to escalate, and it's absolutely critical that investors protect themselves and their families from what is coming. And that was one of the things that Michael Pinto said. He's a money manager. Investors must own precious metals when nearly every other quote-unquote risk-free sovereign investment offers a negative return after adjustment for inflation. He's talking about bonds. You need to have some money in hard assets, which obviously does well against inflation. Gold is an easy choice. But, Harold, if you look at what's happening in the world today, obviously last night in the United States there was a vice presidential debate between the bloviator, Joe Biden, and the guy that he said had a lot of malarkey, which was Paul Ryan. The truth is it seemed to be a pretty even match. But one thing Paul Ryan said is true, and he knows these numbers. The United States is heading towards a debt crisis. And when we talk about the sovereign debt crisis overseas, you see a potential crisis in the United States. And even if we're half right about our prognostications, our predictions, you want to have an allocation of precious metals for protection. As we've always said on the show, we are optimistic people. Harold and I, it's not about optimism or pessimism, it's about realism. When we had our seminar here in Edmonton about a year ago, one of the things that I said when I spoke very briefly was, people can handle the truth. You want to hear the truth. And the truth is we are in tough times, but it also means that depending on how you shift your money, you can still protect yourself and possibly make money at the same time. And that's why, Harold, we advocate for hard assets in a portfolio, because even in these chaotic times, geopolitically and financially, you can still come out of it on the other end, as you've said for a long time, looking good if you just do the right things based on what's currently happening.
You're 100% right, Randy. Again, every market has its time, and this is a time for hard assets. It's a very, very difficult time for most people. Again, there's a lot of people not working. There's a lot of people concerned, especially in the States, about losing their home. There's still, a phenomenal amount of people that are upside down on their mortgages, meaning that their mortgage is worth actually more than their home. So these are troubling times for most. And, I'm a big believer in insurance. I think most of us are. The fact is that if we have insurance on our home and on our car and on our health and life and everything, we need to have insurance on our financial situation. And, at this particular point, owning physical gold and silver, diamonds, and oil is going to get us through these difficult times and put us in a situation to where we can attack the next market when the next markets are ready to, to be attacked, type of thing. So all in all, again, whatever is happening in the world, there's a way to invest for it. All you need to do is have, the wherewithal and the, and have the guts to do it. The fact is that we've been on the radio here for 11 years, and we have a lot of clients. I'm Canadian myself, Randy's Canadian, and all we want to do is make certain that we get through this. Most of our clients are not billionaires. We're just hardworking Canadians that have had some success and put away some money, and we don't want to lose it. And that's the most important thing. I would much rather see us preserve our capital than put ourselves in a position to where we're concerned about not making a return and then doing something risky. Now is not the time to take risk. Now is the time to be conservative, to be smart, and to get ready for the next 5 years, because the next 5 years we could make a ton of money together.
The world's richest man, Carlos Slim, out of Mexico, put $750 million into a mining company this week. Don't really pay attention to what people say. Look at what they do. And the big money is going into hard assets. One thing I wanted to touch on quickly, our audio engineer, Mark Patterson, had mentioned to me a documentary, Chasing Madoff. Strangely enough, I had put it on my DVR. I had a chance to watch it this week. If you get a chance, watch Chasing Madoff. It was about Harry Markopolos, who has been on 60 Minutes. He warned them about Madoff 10 years before it happened. And you need to protect yourself, because the truth is the government not always is going to be there. The telephone number to learn more about investing in precious metals, 1-866-623-2002. The website is wwpmc.com. Protect yourself, wwpmc.com, 1-866-623-2002. Going to come back and talk about diamonds and that very important story on pink diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on October the 12th, 2012. Our time is 9:10. Just the other day, it was 10:11:12 on the calendar. Sort of a strange anomaly. 9:10 Mountain, 11:10 Eastern. Radio show runs AM 640 in Toronto, QR 77 Calgary, 630 Chet Edmonton. If you ever miss a radio show, they are archived on Harold's websites, rarecoloreddiamonds.com and HESradio.com. And Harold has taken the extra step to have a podcast on iTunes. iTunes you can put on any computer, any device, free of charge. The podcast is free. You can take us anywhere you go. We are portable. Over 10 years ago, Harold started recommending this company to use when it comes to investing in precious metals. He has confidence in them. The only Canadian company he recommends, Worldwide Precious Metals. They're the experts in this very specialized field of precious metals. To connect with them, 1-866-623-2002. Their website is www.pmc.com. It's that time of the show where we talk about rare colored diamonds. Harold's website is rarecoloreddiamonds.com. You can speak with Harold on the phone at any time. Give him a call, 1-800-432-1022, 1-800-432-1022. He will take your call. Now, this week, it was an exciting week because not only do we have that amazing story on pink diamonds, which I'm going to get to, but we have a stunning featured diamond. And yes, it is a pink diamond. This week's diamond is a 0.47 carat round, brilliant cut, fancy pink Argyle diamond. Go to rarecoloreddiamonds.com, click on the featured diamond of the week. It is there. You will see the video. We have a picture of it and a link to the video in our newsletter. As well, this week, there was an auction, and we have the auction results. Get the auction results from Harold Sotheby's Magnificent Jewels and Jadeite Sale, Hong Kong, October the 9th, 2012. And there was an impressive fancy pink diamond and diamond ring. The estimate on it was $2.3 to $2.9 million. It went for $3.2 million US. Now we come to the story that I was so excited about. I sent Harold yesterday. There's a video that goes along with it as well from the BBC. Pink diamond era nears its end, says an expert. Australia's world-famous Argyle pink diamond source is trickling to a halt in what will be the inevitable end of an era for global luxury jewelry and manufacturing, an industry specialist says. A sparkling keepsake for royalty and the rich, the pink diamond is a delightful freak of nature, according to British jewelry historian Vivian Becker. Now, Rio Tinto owns the Argyle mine in Western Australia. The rugged East Kimberley region produces more than 90% of the world's supply of pink diamonds. But the subterranean stream will be exhausted within the next decade. We've talked about this on the show for a long time. Harold was the first to bring you diamonds 7 years ago. There have been so many copycats since, but Harold was the first. Now, they go on to say in this story, the products of this mine have changed the course of modern jewelry design, and the chances of finding such another stream are slim to impossible, according to Ms. Becker. We have always known it was a limited source, and that a time would come when the fabulous fluke of nature would end. But there is a lack of appreciation for what this will mean. In another decade, the Argyle pink diamond will emerge as the new Fabergé egg, the thing jewelry myths are made of, according to Ms. Becker. She spoke about the international admiration for the precious Australian crystal as a selection of rare and collectible Argyle diamonds went on display in London at Kensington Palace, attracting prices of hundreds of thousands to millions of dollars per carat. Pink diamonds and jewelry are obviously something that have a prestigious history. The value of rarity is the most priceless factor in the world of jewelry today, and as supply tightens, prices will be driven up, according to Ms. Becker. This is the pinnacle of luxury, perfection in a world of chaos, thrilling, high-octane glamour. We are looking at symbols of status and power. This is an amazing story. When I saw it yesterday, I was so excited, sent it off to Harold. There's a video as well the BBC has done. They show some of the pink diamonds that were on display at Kensington Palace. But Harold, 7 years ago, you were the very first to bring this to us. So many copycats since. But there's only one rarecoloreddiamonds.com. There's only one Harold Siegel. And there's only one person who has the connections to pink diamonds the way you do, and that is Harold Siegel.
Thank you very, very much. When you sent me that article yesterday, Randy, and the video, I must have watched the video 30 times. I was so pleased. We recommended gold at $250 and it went to $1,900, and we recommended silver at $4 and it went to $50. However, the call that I'm most proud of is what's happening in the diamond market. The thing is that when you look at the diamond market, it's such a tiny little market, especially the Argyle pink market. Maybe 200 carats a year come out of this amazing mine. So if you put your left hand out and they poured the whole year's worth of production, it would fit in the palm of your hand. That's how small this market is. The thing is that these pink diamonds, they go up by 25% a year, these Argyle pinks, which is in itself a phenomenal return. But when you think about what's going to happen in the next 8 to 10 years, because Argyle says that they are going to close this mine before 2018. Well, it's almost 2013, so that's only 5 years from now. Give it 2 years for these diamonds to run out, and you'll be looking at diamonds that are 10 times what today's prices are. Means that if you have the wherewithal to own an Argyle pink diamond, and let's say you invest $50,000, in the next 10 years, that diamond could easily be worth $400,000 to $500,000. So the fact is that these diamonds are now really starting to come into the limelight because of the Argyle tender and how much press it's getting and how beautiful and rare these diamonds are. Now everybody's talking about them. But this is something that I've invested in, for many, many, many years. I've been in business 35 years in the investment business, and when I look at a tiny little market like the Argyle pink diamond market, how valuable it is, how important it is, and how it's not going to be here anymore, it really doesn't take a rocket scientist to realize that supply and demand is going to make these prices go tremendously higher. And then if you do a little bit more research, for example, into blue diamonds, you're going to find that a very similar situation happened back in 2005. All of a sudden, the major mine that produced these magnificent blue diamonds closed because they just were not productive anymore. Back in 2005, you could have bought a 1-carat vivid blue diamond for about $200,000. 3 years later, in 2008, even when the financial world was crumbling, there was an auction in Hong Kong, and out of nowhere, that vivid blue diamond sold for $1.4 million, 7 times what it was 3 years earlier. We're following the same pattern with pink diamonds. And again, history always repeats itself. So again, we're now looking at pink diamonds. The mine is going to close. If you're one of the fortunate ones to own a pink diamond from the Argyle mine, I believe you're going to see a 10 times return. A $50,000 investment can turn into $500,000. A $100,000 investment can turn into $1 million. The thing about the Argyle pinks is that they're smaller diamonds. The largest diamond to come out of the mine last year was only 2 carats, and that diamond sold in the millions of dollars. So the fact is that most of my clients that invest in these magnificent Argyle pinks, they invest under $100,000, and you can do extremely well owning an Argyle pink diamond. Now, there's many different colors of pinks. We only carry the top colors, which are fancy pink, fancy intense pink, fancy deep pink, and the most sought-after diamond in the world right now, which is the fancy vivid pink. Fancy Vivid is the highest color grade, and as you'll see when you do get our newsletter, and if you want the video and this report sent to you, just call us or email us, and we will send it out to you free of charge. And when you see it, you are going to want to invest your money in the safest and the most profitable assets, which are Argyle pink diamonds. In fact, if you go to my website, rarecoloreddiamonds.com, rarecoloreddiamonds.com, go to the loose diamond section, and then look at the 3 colors of pinks, the fancy, fancy intense, and the fancy vivids, you're going to see the most beautiful diamonds you've ever seen. On top of that, we've invested in the technology of videoing our diamonds, which is extremely difficult to do. We actually had to have a whole system built for us so we could video our diamonds so our clients can see every aspect of this diamond. If you go to the vivid pink diamonds, which are the most sought-after diamonds in the world right now, in actual fact, on this video in England, they did speak about the fact that a 1-carat vivid purplish pink is the most sought-after diamond in the world and sells for over $1 million. Well, I have clients 5-6 years ago that bought vivid pink diamonds that were a carat in the 250 to 300,000 range, and now these diamonds are valued at over $1 million, and in the next 4 to 5 years, those diamonds could be worth as much as $3, $4, $5 million. So I do have vivid pink diamonds. In fact, if you go on our website, there's something extremely rare there. There's a match set, a .32 and a .28 of fancy, vivid, purplish pink diamonds. They are so ridiculously rare that they're one of the only match sets available in the world today. Those type of diamonds carry a 30 to 50% premium when you go to sell them because they're nearly impossible to get. One of my favorite diamonds of all is the 78-point radiant cut, fancy, vivid, purplish pink. Look at the video of that diamond. It's almost red in color. Now, we have our diamonds. We sell our diamonds at phenomenal prices because we make our money when you sell your diamond. We're the only company that can resell diamonds for you. As Randy mentioned, there's a lot of companies that have popped up lately and tried to get into the diamond business without really even knowing the diamond business. The fact is that it's all contacts, and I've got the strongest contacts because I'm the biggest in the diamond business and have been for a long time. So we bring to you phenomenal diamonds that you'll do tremendously well with. There's no risk to these diamonds because there's so few of them, they will never, ever fall in price. It's like economics 101, supply and demand. When the demand is very high and the supplies are very low, the prices always go higher. Look at our Argyle pink diamonds. We have them starting at $20,000 and going up from there into the millions. So depending on what your financial situation is, you can own an Argyle pink diamond. One of the best investments you could ever make. Now, it's not a short-term investment. You don't buy it today and sell it a year from now. You're not going to make a lot of money. You want to put it away for your retirement or for your safety, and you hold on to a diamond like this for 8 to 10 years, and again, a $50,000 diamond can turn out to be a $400,000 to $500,000 diamond for you. Now, how do you go about selling these diamonds? We realize that the diamond market has always been a very strong market. However, when you go to sell it, where do you sell these diamonds? The fact is that most people do not have the wherewithal to resell them. We know this. I've been in the business a long time, and what we did was probably one of the most important things ever in the diamond business, which is created the secondary market to resell them. You know, if you look at the auction results from Christie's and Sotheby's, the two major auction houses in the world, you know, a lot of the diamonds that sell there are in the millions, $5 million, $10, $30 million range. But how about the smaller diamonds? They're very valuable. They go up tremendously in value. How do our clients sell them? So we built 8 Siegel Fine Auctions, the only real, live, real-time auction site ever built for the Internet. But it's not like an eBay site where you just go on and you basically place a bid and find out a few days later. I sell every single piece on the website. So it's a live auction. When it starts, you know, first of all, you've got to sign in and get your password and everything like that. And we are going to have an auction at the end of this month. We took the summer off because, you know, most people are on vacation. We're going to auction some of the most magnificent diamonds that you have ever seen. Some Argyle pinks, some yellow flawlesses. We've got some magnificent emeralds, rubies, and sapphires of extremely high value. And we have some beautiful gold and silver coin sets. So, again, this is what 8 Siegel Fine Auctions does. It created the secondary market for us all to do well. And that's how my company does well, because when you do well, we do well. If you don't do well, we don't do well, because we get 10% of the profit when you sell, and that's how we make our money. So if you bought a diamond for $50,000, and let's say we sold it for $150,000, you made a $100,000 return, we get $10,000, and you get all of the rest. So again, we're very proud of what we put together here. Our website is all on video. In most cases, you can see the GIA reports right on the website. We ship these diamonds directly to you. You own them outright. They're magnificent. Some people just keep them as loose diamonds and put them in their safety deposit boxes. Others have put them into museum quality pieces, and we have our own line of jewelry called the Argyle Dream Collection that will blow you away. It's the most magnificent rings and necklaces and bracelets that you could possibly imagine. And the reason that we do this is that when we go to sell them, if you look at auctions, you know, when diamonds are put into jewelry, they tend to sell for a fortune. So, again, we're so excited about bringing Argyle pink diamonds to our clients, 7, 8, 10 years ago, but now we're just absolutely thrilled that other experts in the industry have finally realized what we've been talking about all this time, and they agree that the price of these diamonds are just going to go ballistic over the next 6 to 10 years. So, again, go on our website, rarecoloreddiamonds.com. You'll see the largest supply of Argyle pinks. Look at the fancy vivids. They are the most expensive of diamonds, but again, they're still affordable to our clients. Again, we try to keep the prices as low as possible so we can make as much money when we sell, so we can both do well. We love these Argyle pinks. Look at our videos. Get the information on the newsletter, because again, we want to send you that video from England, and you're going to see what the experts are saying about these magnificent Argyle pink diamonds. And by the way, all of the reports that we send you, our newsletters and everything, are all free of charge. The other diamonds that you want to invest in are yellow flawless diamonds. Yellow flawless diamonds are absolutely beautiful, and they're very, very, very rare. There are a lot of yellow diamonds around that are flawed, VS1s, VS2s, SI1s, SI2s. Those are not the diamonds that you invest in. You only invest in the yellow flawless diamonds, internally flawless diamonds. The fancy light yellows, known as canary diamonds, are magnificent. Those are in the $15,000 range to $20,000. The fancy yellow flawlesses, which are the color level above that, they're trading right now at about $25,000 to $30,000. Then you go into the fancy intense yellows, and those are in the $30,000 range up to $50,000 or $60,000. And then you've got the fancy vivid yellows, which there's very, very few of them available. In fact, I believe I only have 4 of them on my website at this particular point. That's how rare they are. One of them is a 6-carat that sells in the 7 figures, but again, it's a one-of-a-kind diamond, and these diamonds go up by 25% a year. They double in price every 4 years, but during times of high inflation, which we are expecting, they went up in 1979 and 80, 500%. So a $20,000 diamond today could be worth $100,000 to you in the next 10 years. Most of my clients that buy these are sick and tired of the stock market, not getting any returns on their RSPs, and most of my clients that own these type of diamonds put them away for retirement. I'm 59 years old. I've got a tremendous collection. My children and grandchildren all have diamonds put away for their future, and almost all of my clients own diamonds put away in their safety deposit box. This is a phenomenal asset that responds to inflation as well as gold and silver without any risk, because these diamonds never, ever have fallen in price. We also have on our website a historical price tracking system that will tell you what diamonds were 30 years ago, what they are today, and what they're going to be 5 and 10 years from now. So, again, we do everything for our clients. We deliver these diamonds directly to you. We pay for the shipping, the insurance, and the duty coming into Canada. We keep you advised every step of the way. We send you our newsletters every week. We send you our monthly diamond newsletter. We send you auction results, and when the time comes to sell the diamond, we want to sell the diamond for you. We're really the only firm that can do that. I've never been more proud of a recommendation. Again, we've had tremendous success over the last decade when most have not. However, now you're starting to see what other experts are realizing about the diamond market that we realized a long, long time ago. So, again, I couldn't be more pleased. We also have other diamonds. I mean, the rarest diamonds in the world are red diamonds. They're nearly impossible to get. Maybe once every 4 or 5 years, one comes onto the marketplace. You can go on our website and see the rarest diamonds in the world, museum quality pieces. Red diamonds sell for about $2.5 million a carat and up. Then comes the blue diamonds, and the blue diamonds are next to reds, and that's primarily because the mine that produced them had closed, and there's so few blue diamonds around, and now some of the vivid blues are selling as much as $2 million a carat. On my website, I've got a 3.5 carat vivid blue pear-shaped diamond that sells for $7 million. That diamond, 10 years ago, or even 7 years ago, would have sold for a fraction of that price. That's how much these diamonds go up in value. What happened with blues is now going to happen with pinks. So if you're in that position, the minimum investment for a pink diamond is about $20,000-$25,000, but that diamond in 10 years from now could be worth $250,000. And again, I don't know of any other investment that will give you the returns that these rare colored diamonds will, with the safety that you have because there's so few of them available. We carry orange diamonds, which are ridiculously rare. We carry purple diamonds. If you look on the website, I have the only pure purple diamond that I believe is available in the world for sale, and it sells for close to $1 million, and it's only 1 carat, the size of your baby fingernail. So again, you can go to the Smithsonian, you can go to and view some of the most beautiful museum quality pieces at certain places, but you can also go on my website and look at the videos of these outrageous diamonds. Also understand that not all of my diamonds are on the website. I've got diamonds starting at $15,000, and I actually have one diamond that's worth over $55 million. Those type of diamonds, the ridiculously highly priced diamonds, you really don't show. You don't want anybody to see those diamonds. You don't want them to be viewed, by the general public. But just realize, for those out there, that we have diamonds starting at $15,000 and going up to over $55 million. We're tremendously excited about the diamond market. Argyle pinks, one of the best investments you can possibly make, and it's no longer just us saying that. There's so many experts out there that are in agreement with us, and again, we are the largest seller of Argyle pinks in the world. Also, yellow flawless diamonds. We have a beautiful supply of yellow flawless diamonds. There's only maybe 100 available for the entire world, and a lot of them are on our website at this point. So those are the two major markets. You don't have to be a multimillionaire to invest in the rare colored diamond market, and again, all we want is for our clients to get through these extremely difficult times and do tremendously well. Give us a call. We'll send you our newsletter for free. We'll put you on the list to get our monthly newsletter for diamonds for free, and we'll send you these tremendous reports that Randy found this week in the video and the report on Argyle pink diamonds, and we'll email those to you totally free of charge.
RareColoredDiamonds.com, RareColoredDiamonds.com, or connect with Harold, 1-800-432-1022, 1-800-432-1022. The featured diamond of the week, a 0.47 carat round, brilliant cut, fancy pink Argyle diamond. Check it out online in our newsletter. Get our newsletter this week from Harold because it has that story. Pink diamond era near its end. And let's quickly review the highlight. And this is from Vivian Becker. We have always known it was a limited source and that a time would come when this fabulous fluke of nature would end, but there's a lack of appreciation for what this will mean. In another decade, the Argyle pink diamond will emerge as the new Fabergé egg, the thing jewelry myths are made of. There still is time to get your own pink diamond as well. She said the value of rarity is the most priceless factor in the world of jewelry today, and as supply tightens, prices will drive up. Get the video, get the story from Harold. Connect with Harold, RareColoredDiamonds.com. Telephone number 1-800-432-1022, and Harold will be more than happy to take your call. To invest in precious metals. Over 10 years ago, there is a company Harold recommended. He still recommends it today, Worldwide Precious Metals. Their website, www.pmc.com. The telephone number, 1-866-623-2002, 1-866-623-2002. Their website, www.pmc.com. If you don't have an allocation of precious metals in your portfolio today is the time to pick up the phone and talk to them. It's so crucial. Harold, we have approximately 1 minute left. It was a very interesting week, as I said off the top of the show. Very similar to what's happening today as to what happened in the late 70s. Inflation, poor economy, possible one-term president, and trouble in the Middle East.
You couldn't have summed it up better. That's exactly what the situation was back in 79 and 80. Gold went from $125 to $850. Silver went from $1.50 all the way up to $52, and colored diamonds went up 500%. I don't think we can sum it up any better than that.
Thank you very much, Harold, for a fantastic show.
My pleasure. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold, RareColoredDiamonds.com, and he will take your calls, 1-800-432-1022. If you'd like to speak personally and privately with Harold about rare colored diamonds. rarecoloreddiamonds.com, 1-800-432-1022. Get those articles, the video we spoke of. To connect with Worldwide Precious Metals, their telephone number 1-866-623-2002, 1-866-623-2002. Their website is wwpmc.com. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.